Everything that Donald Trump is doing is pushing the world away from the dollar and into gold. I mean, he's not doing it intentionally, but the unintended consequence of the policies that he's pursuing are very bullish for gold and silver. Now, they're bearish for the dollar. The dollar hasn't cracked yet. The Treasury bond market hasn't cracked yet. That is coming, right? Gold and silver are the early warning. What's happening now, I think, is forecasting a much bigger monetary crisis that may hit later in the year or maybe even next year, but in the dollar, in the bond market. Gold and silver are your early warning signs. First it was gold, and now it's silver, and of course platinum, the whole precious metals complex is flashing that the dollar is in trouble, that the U.S. bond market is in trouble.
Gold and silver are officially shattering records in 2026. As of mid-January, gold has blasted past $4,600 per ounce, while silver is going parabolic, recently hitting a historic $90 mark. With the U.S. dollar facing its worst performance in years and a surprise criminal investigation into Fed Chair Jerome Powell shaking market confidence, the safe haven rotation has turned into a full-blown stampede. In this episode, renowned economist Peter Schiff explains why this rally is only the early warning sign of a massive sovereign debt crisis. He breaks down how current political pressures and harebrained fiscal policies are unintentionally pushing the world away from the dollar and toward gold. Schiff compares today's market to the 2007 subprime collapse, warning that while the dollar hasn't cracked yet, a much larger monetary meltdown is looming. Is this the final window to protect your wealth before the U.S. Treasury market follows suit? Watch to find out. Don't forget to like, subscribe, and enable notifications for additional in-depth content. Thanks for joining us again. Enjoy the video.
I think the internet and tokenization and blockchain could play a big part in the revitalization of gold and silver, especially as the air comes out of the Bitcoin bubble and people are looking for viable alternatives. We already know the central banks already found a viable alternative to the dollar, and that's gold. And so this trend is going to gain momentum with the fundamentals that are going on right now. And I talked about what happened over last weekend that helped fuel the weekend gold rally. And that was the announcement from Jerome Powell that he received a notice from the Justice Department that he is under criminal investigation for statements that he made to Congress about the renovation project of the Federal Reserve building in Washington. So I spoke at length about that, as well as the president's harebrained idea to cap credit card interest rates at 10%, and how this stuff, also the stuff that he's saying about Greenland. I mean, everything that Donald Trump is doing is pushing the world away from the dollar and into gold. I mean, he's not doing it intentionally, but the unintended consequence of the policies that he's pursuing are very bullish for gold and silver. Now, they're bearish for the dollar. The dollar hasn't cracked yet. The Treasury bond market hasn't cracked yet. That is coming, right? Gold and silver are the early warning. To me, it's just like 2007 when subprime blew up. That was the warning that the rest of the mortgage market and the financial system was going to follow. I knew the financial crisis I had been forecasting for years was a lot closer to a reality once I saw what happened to subprime. But the reason that Wall Street was oblivious, the reason that Ben Bernanke said subprime is contained, is because he didn't understand the problem in the economy, in the housing market, in the mortgage market. So from their perspective, it was no big deal what happened to subprime. I knew it was the tip of a huge iceberg. And I appreciated the warning because I understood what the warning was about. Same thing is happening now, right? The financial crisis didn't come until a year later. Subprime blew up in 2007. Financial crisis happened later in 2008. And in fact, in early 2008, people still thought everything was great, right? Even though we were already in the Great Recession. They didn't know about it yet. I knew about it, but they didn't find out until the end of the year when they revised all of the economic data going back a year and said, oh, by the way, we've been in this great recession for a year. Well, what happened with gold, what's happening now, I think, is forecasting a much bigger monetary crisis that may hit later in the year or maybe even next year, but in the dollar, in the bond market. So gold is reacting first, just like subprime reacted first in 2007. You saw the broader crisis hit a year later. Same thing's going to happen now, except it's not a mortgage credit that is the problem. It is government credit. It is sovereign debt. It is the debt of the United States. It's not a mortgage crisis. It's a U.S. Treasury crisis. That's what's coming, and a U.S. dollar crisis. Gold and silver are your early warning signs. First it was gold, and now it's silver, and of course platinum. The whole precious metals complex is flashing that the dollar is in trouble, that the U.S. bond market is in trouble. And what Trump is doing is playing a big role in that.
Peter Schiff warns that even at these sky-high levels, the real upside is just beginning, as Wall Street still underestimates the unstoppable fundamentals driving precious metals higher. Mining stocks, especially silver plays, remain absurdly undervalued despite tripled prices, with massive profit explosions ahead once investors catch on. He urges investors not to wait for a big pullback to $50 or even $70 silver, warning that those days are long gone as physical supplies run low and premiums explode. Is Wall Street finally waking up to the gold and silver boom? Or will you get left behind? Watch the full breakdown now.
And another big week to wrap up in the precious metals. New record highs for both gold and silver. In fact, the records were set on Monday. We had a huge rally starting Sunday night into Monday. At one point, gold was up better than $120. Silver was up over $6. It was the biggest dollar rally in one day I've ever seen in gold. Now, percentage-wise, it wasn't a record, but dollar-wise, it was. Gold rose to a high of about 4,640, and silver was trading above $93 an ounce. We ended up closing the week for gold at just below 4,600. I think we went out about 4,594, 95. Silver managed to close the week, I believe, just above $90. Now, we went out on a down note. Both gold and silver had sharp sell-offs intraday. Silver was down over $4 at one point during the day. Gold was down about $70 on the lows. But by the time they wrapped up trading for the week, gold was only down about $20, and silver was down about $2.25. Now, silver's been a lot more volatile than gold all week. But the important point is that the volatility is taking place at these very high prices. And this is just another consolidation of this big breakout. So if you're thinking about looking for a big pullback to buy silver, think again. The opportunity to buy $50 silver is long gone. Right? And you're lucky if you can buy $70 silver, but I wouldn't even wait for that because I think the supplies of silver are going to start to run low and the premiums are going to really start to blow out so that even if silver goes down, the price of silver coins and bars may still go up. And in fact, most of the move on the week, this week, happened on Monday. Right? So you caught the whole thing just buying over the weekend, which is what I urged all the listeners or viewers to the Market Wrap to do when I recorded a week ago. And I'm going to give out the same advice now. And that is, don't wait for Monday. In fact, this Monday is Martin Luther King Day. So if you're going to wait for regular trading to resume, you're waiting for Tuesday. Don't wait. I think we're going to have another huge move up on Sunday night, Monday, Tuesday. Now, again, gold stocks are different types of investments than physical precious metals. There's a lot more inherent risk when you own an operating business that is generating a profit. I look at gold and silver as a store of value, long-term, safe haven. Gold and silver mining companies are risky businesses, right? I mean, there's so many things that can go wrong when you're operating a gold mine. But the upside potential dwarfs the downside risk. But why are these silver stocks getting hit so hard when silver is $90 an ounce? None of this makes sense. Yes, gold and silver stocks have tripled along with the price of gold and silver, but their profits are going to go up a lot more than triple. These stocks should be much, much higher. The reason they're not is because Wall Street still doesn't understand what's going on. I think the action I saw today is a little bit constructive in that maybe, just maybe, Wall Street is starting to figure out that gold and silver aren't going to crash. And eventually, they're going to realize that they're going to keep going up. And they're going to keep going up because of the fundamentals. And the fundamentals are getting better and better for gold and silver with each passing week.
As Peter Schiff sees it, the precious metals explosion isn't a fleeting rally. It's the opening act of a historic shift away from a weakening dollar empire. With central banks stacking gold at record pace, physical supplies tightening, and Wall Street still asleep at the wheel, the path ahead points to dramatically higher prices and potential chaos in traditional markets. The window to position yourself is narrowing fast. History shows those who act on early warnings win big. Are you ready for what comes next? Share your thoughts in the comment section below. If you found this breakdown helpful and want to stay ahead of these historic market moves, make sure to like, subscribe, and turn on notifications so you never miss an update. Your support helps the channel grow and keeps you informed when the markets shift next.